Good morning. We're going to call the Finance Committee meeting to order at 11:12. And Julie, would you like to lead us in the Pledge of Allegiance?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Okay, can I get a roll call, please? Oh, of course, you know. Uh,
There you go.
Berkowitz,
Here.
Butler, Ortiz, Oxley, Trainier,
Present.
Winfrey,
Here.
Muquist.
Here.
We have a quorum.
Thank you. Next up is approval of minutes. Can I get a motion to approve the regular meeting minutes of January 6th? Motion.
Comment about that.
Okay, so we got a motion from Winfrey. Do we have a second?
Second, Trinier.
Second, Trainier. Okay, discussion?
I have no minutes on my agenda. When I click on the attachment, nothing is downloaded. This has happened quite a few times.
Yeah, I've got mine are right here.
Yep, mine too.
You'll prove me wrong. Which is what I want.
No, you are correct. Yours are not loading. All right, I will make sure we get that adjusted. We'll get you paper copy.
Yeah,
right away.
so-
Thank you. So,
So
I'll just
are we
abstain.
okay voting on this or?
I'll just abstain.
Okay, can I do a roll call, please?
Berkowitz,
Abstain.
Butler, Oxley,
Yes.
Trainier,
Yes.
Winfrey,
Yes.
Muquist.
Yes.
Motion passes.
Thank you. Next up is under old business. Rashawn, do you have a sales tax update for us? Or is the report sufficient? Anybody have any questions? Maybe I should ask that. Okay, well, let me get a motion in this. Do we need a motion in a second to put that on file? Do we usually do a motion in a second to put that on file? Oh, I forgot public comment. Boy, I apologize, you guys. I'm not here today either, obviously. Okay, public comment. Is there any public comment? One more time, public comment? Okay, thank you. I'm so sorry. Okay, now under old business, we have a sales tax update. And Rashawn, please.
No motion is necessary, just an update, and there's no just.
Thanks. I think I ask that at least every other month, so. Okay, go ahead, Rashawn.
Good morning. Answer any questions if any of the committee members have.
Anybody have any questions?
I do, thank you. So, Rashawn, on the budgets, I've noticed that the local use tax, those dollars appear to be low on multiple.
So at the
And Can
beginning,
you remind us what the local use tax is?
so the local use taxes, so let's say you purchase something online and you purchase it in a different state, right? So you didn't pay the Illinois tax on that. So the retailers are responsible for paying the tax on that in Illinois. So the law changed effective January 1st of 25. So the retailers now pay a retailer's occupation tax. So that is no longer local use tax. So that's, you'll see the decrease there and a significant increase in our sales tax. So that's the difference.
So it essentially becomes a local
So a retailer's occupation tax, and that's, you can research that on the Illinois Department of Revenue site. So basically, it's a shift. it used to go into the local use tax bucket, but now that revenue is going into the sales tax revenue bucket.
Okay, so if that's the case, then, so in 2026, then we will see that local use tax disappear. It'll fall.
It
off.
won't disappear. We will still receive revenue in that, but the revenue projection has, we're projecting it at a moderate revenue projection as opposed to, we budgeted in 25, 4 million, and I think for 26, we budgeted 1.5 to reflect the decrease that we have seen in 25.
Okay, so, but it is going to fall off eventually, or it isn't?
Not that I'm aware of, no.
Okay, so if it doesn't fall off, but it does decrease, what, those tax dollars are on what product or what?
It would still be on whatever the product, and I don't want to throw anything out
still
there, would have to
Internet?
read. Yes. Mhm.
Okay, so they kind of chopped it up, so it,
Yeah, as I mentioned before, would have to do a little bit more research on the Illinois Department of Revenue.
mhm. So, where are those dollars then moving to? Is it moving to state sales?
Yeah, that's what I mentioned.
Okay.
Yeah, you'll see the increase in the state
Okay.
sales tax.
So for 2025, our actual number in the first graph for current year sales tax, state sales taxes over budget, it's at 126%. Do you anticipate, when is the end of the calendar year?
So our fiscal year ended November 30th. Our lapse period ends at the end of February. So any receipts for revenue for 25 will be reflected there. So what this says is that we have exceeded our revenue projection.
Thank you.
Mhm.
So we're at 104%.
That's
Hold on just a minute.
supplemental tax. Mhm.
So you believe that the state sales tax will reach the goal to offset that decrease of local use tax?
Yes.
Okay. And we'll see that next month. And is that the same with all the following charts as well? Because
Yes.
there's quite a difference.
Yeah, so we project revenue during the budget planning process on a conservative basis. And that's been our practice. And your actual receipts, what it indicates here, if you've exceeded your revenue projections, then that would be in excess of your, what you have budgeted. Does that make sense?
Mhm.
Okay.
Yes, thank you.
Is that you're good? Okay. Okay, anybody else have questions for Rashawn? Okay, thank you very much. Next up on the agenda is new business, and we're gonna start off with a discussion of, a discussion and investment review by Tim Brophy. And Tim, you've got some folks online that you need to introduce, I believe.
We do.
Thank you.
So we can come to them in a moment if you want to start with a few of my comments, then I'll introduce them when they're
Whatever
coming
you
up.
want to do.
Okay.
This is
Very
this
good.
is your show.
very good. All right, let's look at the first item on the, yeah. So you should have these. Okay, so this is a bit, kind of a big 40,000, 30,000 foot look at all the money in the county as of November 30th. So we don't do this all the time, but you get those reports that have this information in it, but I wanted to just take a snapshot and look at the end of our fiscal year. There was 191 million plus dollars in your corporate funds and 307, what's the number there? Sorry. 310? Okay. In treasure class. And so the corporate funds, as you know, I hope, are those that the county uses on a day-to-day basis for all the things that are there to do. And the treasurer's class, see, are funds that the county holds, but are for specific items, other special purposes. There are 51 unique funds in the treasurer's Class C, everything from the 911 system all the way down to renewable energy facility, debt service fund, and 49 in between. And so I separate those for you here because we're going to hear from one of our investment managers real soon about how these funds are invested, and we invest them differently. Corporate funds are shorter term funds. We need them more often. They need to be more liquid. The treasurer's Class C funds are a little stickier. They tend to stay around longer. These are reserve funds for these special uses, and they're not drawn upon as often. So the investment strategy there is a little different than the corporate funds. Next slide. I'm sorry, that's just an addition to that one. Keep going. Yeah, that didn't fit. That didn't fit. I'm sorry, they put them, separated them out. Go ahead. And yeah, go ahead. Sorry, these are all in one large page. Let's go to Old National. Yeah, besides those two funds, the at any given time, and at the end of November, you'll see here, we had $27 million in our checking account. This is where the money comes in and out most often for all purposes corporate. And so these funds are invested that you saw earlier. That's in the checking account. So if you think about the way you manage yours, you have those funds you're using on a day-to-day basis. That's what you're looking at here. And then those investments in IRAs are set aside and you don't use them as much. Next, please. Let's go to very quickly the last one on there, Tim. Just want to, yeah, that last one there. So this is a look at the U.S. Treasury yield, what they call the yield curve, on 3 different dates. The blue one is January 10th, 2019. The orange one is January 10th, 2023. And the green one is January 10th, 2026. And I put this up here for you to see, if you look at the blue one, which is a much more normal curve, short-term things are at low rates. As you go out longer, you get higher rates. You witness this personally with CDs. If you do a short-term CD, you get a little interest. If you do a long-term CD, you get a longer interest. Same thing here. The U.S. government borrows money short-term and long-term. The orange curve, you'll notice, is right after COVID. Things got really out of whack. And this is why we have such an excess in your cash reserves, is that the short-term funds, those which we use more often with county investments, were yielding great numbers. And of course, I took advantage of that. I earned as much as we could, as long as we could, and we're still there. The green one is more recent. You can see short-term funds are still somewhat elevated, but the curve is starting to return to normal. And so those excess yields you shouldn't count on them. Those things we enjoyed in 22, 23, 24 are not going to be there going forward on a normal basis. And so I wanted to point that out as we talk about reserves. So these funds that we hold together, the corporate and the treasurer's investments of almost $500 million, are held by a number of different places. We do some local, a lot of the local banks, but you've got a lot of money, and this amount of money can't be held at local banks. They take some of it. If I offer them 2, 3, 4 million, they'll take that. But they run out of ability to hold that much. So we have to spread it out. So prudence dictates that we diversify our holdings both in where it is and the type of instruments it's in, but across many different holders. Today, we're going to meet one of our larger holders by the name of Stifel. And they're listed on your pages there, but they've got a short presentation I want to tell you so that I can introduce you to Stifel and also show you what we do on a monthly basis as we analyze your funds. So if you would please, Tim, the third item there, yes. And now to the chair, we're going to recognize 2 gentlemen, Mark and Jeff from Stifel. And I think Mark is going to begin, and then Jeff will follow up in a little bit. Mark, if you would, please.
Great, Tim.
And then,
Thank you. Thank you, everybody.
You're going to
for
share
having
your
us. Can everybody
screen,
hear us?
and Tim's going to figure out how to show it to us here.
Yeah.
Welcome, you
Are you
guys.
able to hear me?
Thank you.
Can
And
anybody
we're
hear me?
Almost there. Yeah, let's test the audio. Can we hear, Mark, chime in and say something
Um,
to us?
I'm
No,
trying to. Can anybody
we're
hear
not
me?
getting audio on you yet. Just give us a minute to figure that out. Make sure you're not, and make sure you're not muted on your end. Can you hear me, Mark? Give me a wave.
He can't hear us either.
Yep,
Looks like-
he's got a
Oh,
thumbs
there
up.
we
He can
go.
hear us. So now we got to get audio
had-
from those guys. Or what do you think? Anything on your end, guys, you can see?
Yeah.
Hello, hello.
Anything we can unmute on your end, Mark? And
Mark,
Jeff,
can
doesn't
you-
look like it's muted, but
There's no volume.
Can you hear me, Mark?
I
We're
can
not
hear you.
getting
I
any
can hear you,
volume.
Jeff.
And I can hear Mark as well. I thought I'd jump in. Hi, everybody.
well, learn something new every day. We'll figure it out.
That's
Uh,
interesting.
Being followed?
Yeah.
Tim, can you folks
Mark, I'm
hear
gonna
me?
put you on the phone and up to my microphone.
Can you hear
and
me?
We'll go that way.
Hey, Tim.
All right. Can you, let's see, we're gonna pick it up here? Go ahead, Mark.
Hello, can everybody hear me?
Yeah.
Yes, let's proceed.
Okay, so just to let you know, Jeff and I were able to hear each other, but we weren't able to hear you. I guess you guys weren't able to hear us. So thank you very much for your time. I appreciate it. Thank you, Tim, for having us. My name is Mark Davidoff. With me today is Jeff Ringstadt. Jeff Ringstadt is a portfolio strategist that works very closely with me and many of my clients here at Stifel. I started working with Will County. Well, it's been over 10 years ago. I used to work originally with a gentleman named Brian McDaniel. In 2018, I used to work for a company called First Empire. And in 2018, we were purchased by Stifel. And Stifel gave us a much broader range of products and infrastructure that we were able to work with. And as we kind of leveled up and became a bigger company, we've really developed a great relationship with the county. So we really appreciate that. Love working with the county and helping the county. I'm going to share my screen. Please tell me if you're able to see it.
Yes. Yes, we see it. Go ahead.
No, we don't.
You see the overview screen here?
Well, we did for a moment. Hold on, we'll get it back.
It's- Yeah, you.
Yeah.
there you go.
Okay, we got it now, Mark. Go ahead.
You got it. Okay, great. Thank you. All right. So our fixed income platform is pretty robust. We have over 150 traders. We have over 200 members of the public finance team. So those folks are responsible for helping cities, counties, and other municipal entities issue debt. We have over 250 of institutional sales team, over 5,000 institutional accounts, and 80 members of the fixed income strategies group. So that's a very, very deep bench. And really what sets us apart, I feel, and our biggest asset is these strategy folks. We have folks in both portfolio strategy, and we have folks who are just strategists on the individual products. We have a real devotion to municipal entities. We're the number one issuer of agencies as far as different deals to date. We work with over 300 state and local entities across the country, and we support many of the different associations, such as the California Society of Municipal Finance Advisors. And we've really made a dedication to supporting associations in the state of Illinois this year. As I mentioned, we have portfolio strategists and portfolio analytics. And then we have product related strategists and product related analytics as well. Here's just an overview of our portfolio analytics. Some of those we're going to touch on with Jeff in a moment. And then we have our bond swap analysis. So we use this not just for bond swaps, but before we make a recommendation for the county to invest in a security, we model that security in the portfolio so you could see how it changes the portfolio in any way.
Mark, we're going, we're scrolling this, so if you would tell us what page.
Oh, I'm sorry.
Yeah, tell us what page.
I'm on page 10. So you're not able to see the screen?
Yeah, we're just moving it as we go, so you gotta tell us what page you're on and we'll turn to that.
I apologize. And Brian, that was all I had.
Okay,
I was pretty much done.
okay. Moving on to Jeffrey.
Jeff, are
Thank
you able to?
Can you?
Jeff, I'm gonna call
Jim?
Jeff and get him on the phone here with us. Hold on one
Okay.
second.
All right,
Okay.
or you can have him call me directly, either way.
No,
No, he just went through it quickly.
yeah.
There's a lot there that you didn't, yeah. There, anything you want to ask about that? Yeah.
I'm gonna call you right back. We have Jeff on the line, okay?
All right, thank you. So that gives us a little taste of the professionalism that we have, that we employ, because our local banks can't handle it all. Certainly, one person shouldn't be charged with handling all that. I will tell you, in the last season, I watch interest rates closely and comparing the things we can use. We can use corporate debt, we can use municipal bonds, we can invest in treasuries, we can invest in a number of different things. Sometimes these things move in relation to each other. Right now, treasuries over the last year have been a little more preferable, so I've leaned toward more treasuries in our locals. Go ahead.
All right, Jeff, you there?
Yes, sir, go ahead.
Jeff, you there?
I am.
We got you, Jeff, go ahead.
Are you able, I have my content trying to share there. Are you able to see that now?
Yeah, it's coming up, and we are on, I think on our end, we're on page 10, right? Or, no, that's a
That's
sample,
different.
sorry. You want us on,
We can see his screen now.
oh, all right, we can see your screen now, Jeff, go ahead.
Can you? Excellent, thank
Yeah.
you. So yeah, thanks for having us. Mark gave you the background on us, and we appreciate working with you folks for quite some time. Tim had given you a high level picture of all the funds that you folks manage, and as he mentioned, we work on a portion of that. So we're gonna look at first the treasury side that we're working on. So those are more the investment funds that Tim had mentioned for the 51 different areas that are used. So on this first page, we have an overview of those funds that we're working on. So here in the upper left quadrant, you should be able to see we have about 129 million in 94 individual line items. So we pay a lot of attention to diversification. As Tim was mentioning, he diversifies who and how the funds get managed. And then with the funds that we work with Tim to manage, we're diversifying those funds as well. 94 items, it's about 1%, right, in each individual invested piece on average in this portfolio. So
Jeff, I want to remind everybody in the room, the document I gave him was dated November 30th. So those are our balances as of November 30th. Jeff is giving us now, this is fresh. This is what we would be doing just in my office with them. This is current. So a
Got it.
little different than the balance here. So.
Yeah, I'm looking at this going, my
Money-
numbers aren't the
Yeah,
same.
money comes in and out. Go ahead, Jeff.
Yeah, that's correct. This is fresh off the press. This is balances as of end of January. So yeah, absolutely. Weighted average yield on those funds is 4.6%. And that happens to be a very good performance. I grabbed all of the portfolios that Stifel works on for public entities, banks, and credit unions, which are very similar in duration and liquidity needs. And the average portfolio yield that we saw is 3.27. So you folks are a good 1.25% plus higher than average. So that's really good. Tim and team doing good work there. If we slide down, we can see a 4-year average life. So the portfolio is laddered, right? We have a ladder of principal coming back, but we want to keep track of that average life so that the portfolio, those principals are not outstanding too long, or in some cases too short, right? That 4-year average life gives, if we look at a estimated up 300 rate shock, so this is looking at if interest rates were to increase significantly, say 3% tomorrow, right? Like the Federal Reserve kind of went crazy and raised rates from the 3.5% to 6.5% in one day. The value of the portfolio could decline, right? It's going to be worth less in that environment. That volatility is 9.6%. The average of the portfolios that I just mentioned that I ran is 12.5%. So not only do you have that, a 1.25 higher yield, you have less volatility and less interest rate risk with that higher yield position. So that's really, really good. It comes into play, certainly, maybe not thought about all that often, but all those 51 entities participating in just this piece that you folks are investing, this generates about $6 million in annual income that can be used for those benefits that Tim was mentioning. So that's really, really good. And the outperformance, right, is about $1.75 million. So not insignificant funds coming back into the county. Upper right quadrant, here we show the high level diversification. These are high level sectors where those funds are allocated. If we look to the right-hand side, we see municipal and corporate at 12% and 2%. 98% of this portfolio has some form of government credit to it, right? That includes the municipal entities. Even if we take that out, the 12% and the 2%, 86% of this portfolio has some federal government guarantee to it. So very, very high safety in this portfolio from a return of principal or maintenance of principal point of view. In the lower right quadrant, we look at the laddering or principal profile of the cash flow of the portfolio. Here we can see those first 5 years very heavy in driving that laddering back, right? That's about 75% of the portfolio comes back in 5 years. And so that biggest chunk, that 75%, has a 2.5-year average life, right? The average time to those funds coming back. So that's what helps contributing to having that low risk in the portfolio. If we go to the next page, we do look at the most recent movements of the portfolio. So we keep track of that, working with Tim and team in terms of allocating in the diversified manner and then tracking that and seeing how it's changing over time. Folks are sitting right around that 460 level. There's one slide in here that may show it may be difficult to keep maintaining that high level of income. This next page shows the additional diversification that is in the portfolio. On the left-hand side, the leftmost column, we have those high-level sectors on the shaded rows. But above that, we can see the subsectors that make up each of those high-level sectors. So you have you really have 25 subsectors contributing to those 9 sectors. So very well diversified. We've seen that provide good, smooth performance and safety over many years. We review the current interest rate environment. Tim was pointing out the Treasury yield curve. Here we're looking at the Fed funds target and the futures where they're pointing to for that rate, very important in the market. Lower right, we're looking at the yield curve, and we're keeping track and discussing with them and getting opinions for where to place funds. We also keep track of the economy and its effect on those interest rates, and perhaps where the Federal Reserve may be trying to move interest rates. So there's a section that highlights from our economics team, which Mark didn't necessarily mention, that really brings a lot of value in feeling and seeing where the economy and interest rates are headed. Further drilling into that cash flow, on this page, we can see which sectors contribute to the cash flows according to the coloring of the column. So here we can see on the yellow shaded section, these are bullet-like assets where they're very good for laddering. Those are agency CMBS. Those are federal credit. And we can see the municipal credit is sort of that purple coloring. So there was a shift there. As municipals, they performed very, very, very well. And they got very, very expensive, let's say, relative to other sectors. So we started adding the federal guarantee at even a better level than the smaller municipal guarantees. So shifts in strategy and shifts in placement and that diversification helping to bring that higher yield while maintaining that really high credit quality over time. So that looks at it annually. Sometimes good to put that in perspective to see how little risk you folks are taking. This is full 30 years of the capital markets, right? Folks, you may be familiar with the 30-year treasury, right? That's always talked about. Full capital markets participants use bonds that go out to 30 years. You folks are sitting all the way over on the left-hand side in really 5 years and in is the predominance of that portfolio. Very little risk, very good return. One of the main discussions that we have monthly here is in terms of placing funds is how will that affect the overall portfolio? So what this page is looking at is the next 12 months of funds coming back in, those maturities in those first 5 years, very heavy. Here we see 20 million is going to mature right around the average yield. Sometimes it's not necessarily we focus on that, but we can see that's generating close to $1 million of that $6 million of income. So it's very important to think about where that 20 million will be going. So on the right-hand side here, we're really focusing on the income effect of the rate at which that 20 million is replaced at. So common sense here, if we could replace that at the 460 inside the blue box, we'd have the same income and maintain the same yield. But as rates have come down, I shaded some in light blue down below, there may be keeping the same diversification and allocation, there may be a lower yield, and we want to know the income effects on that. So Tim can really acknowledge that and telegraph that to folks of where income may be changing. Also helps to quantify which of those diversified sectors to look at, right? What type of risk is there? As Tim was mentioning, if you move out the treasury curve and go longer, sometimes you can get more income, but then you can quantify and say, well, is it worth it, right? How much risk do we want to take here and keep that under control? So that's Treasury C. That's the longer term portfolio. I'll just switch real quickly here. I don't want to take up too much of your time. Here we have the corporate portfolio, right? Funds that are used regularly. And we can see a very different strategy here. Similar yield, right? It's not quite 462, but a 416. If we look at the lower right, we can see much shorter maturity. So this will reprice very quickly. And as the Federal Reserve has been lowering rates and pulling the shorter maturity part of the curve low, that yield will move lower quicker. But these funds are needed and they're meant to turn over as quickly as possible so they can be used for liquidity. So this is managed differently. We do the same assessment for this, right? Any funds that we have, we do that full assessment, discuss what the strategy is, where it needs to be, what the maturities need to be, what the diversification, et cetera. And we can see here, right, breaking it out in those annual cash flows. These are predominantly very short-term corporate issues used in this portfolio, very much like, money market type investments. But all in all, still a very good return on that short piece of the portfolio. That's just a quick, very quick overview. We looked at maybe 5-6 pages. We look at about 50-60 pages for each portfolio, and have thorough discussions on all those aspects and bring to bear, as Mark was pointing out, all those different analysts and strategists who contribute to that. Appreciate your time. Thanks so much for having us. And Tim, I'll pass it back to you.
Let's see if there are any questions for you two before we let you go.
Questions, anybody? Julie, go ahead.
Oh, okay, thanks. The executive summary slide,
Hold on. Can you hear her, Jeff?
I had a question on the executive summary slide. There's a column, or a line rather, that says dollar gain loss. And then when you go to 12/31/2025, it has a loss of 11,956,258. Can you explain that line, what that means?
Yes, sure. So, right, I'm going to go to, can you folks still see me sharing?
Yes.
Yeah. So I'll go to this page, right? So here, right, the current position of the portfolio is on this dollar gain loss row, right? So the portfolio is very close to being at the market, right? If we go back to October, it had a small gain of almost, 500,000. Then interest rates went up, so that went down to 100,000. Then it's 275, and right now it's 67,000 potential. If you were to liquidate the whole portfolio now, which you wouldn't do, but potential loss. What the numbers down below on that next line are showing is this is if interest rates went up 3% tomorrow. Right, that volatility number that I mentioned, the 9.6%. If interest rates were to go up 3% in one day, we track that change in value every month, right? And as you pointed out, you can see it changing over time here, along with the actual position of the portfolio over time. So it's very much like a high level risk management thought process calculation, right? It's highly unlikely, we'll never say never, but that interest rates will move 3% in one day. But when you use that as a risk metric, you can kind of compare one portfolio to another or one risk position to another, right? It gives you that sort of extreme level to say, well, this portfolio moves, 12.5 million, but another portfolio goes down in value 20 million. that one has more risk. Not assuming that's going to happen, but it's a way of representing that if that
So,
helps to explain.
so did that, so that's dated, we only have December. We don't have the January column. So December 31, 2025, it has negative 11,956,000. Is that an actual number or is that an estimate?
It's theoretical.
That's an estimate. That's a very hypothetical, right? That would be if rates, instead of the Federal Reserve targeting 3.5%, that in one day they said, hey, we're going to target 6.5%. Very dramatic.
So that's an
almost
estimate.
unrealistic.
Do you put the actual number on here?
The
What
actual is
was
there,
it
isn't it?
actually?
Blue.
The blue
line.
hole.
Actual is-
So
Is
the actual
just above
was
that.
2 lines above
Yep.
it.
You got it. That's an actual market value effect. In other words, if you liquidated the entire portfolio in any one of these 4 months, those are the hypothetical changes in value, a gain or a loss. You got it.
Okay, and then you mentioned $20 million of bonds that are maturing, and I didn't catch, when are they maturing?
All year this year.
Over the next 12 months. That's right.
When?
So in 2026,
They're
That's-
maturing
that's right.
in
yeah,
12 months?
no. Show that bar chart, Jeff.
They're
So
staggered.
they're
I
staggered.
believe I asked for a schedule in the past, but
See it
we've
there?
never received it.
See it here?
Is it
So
different?
that first bar is the 2026 maturities, all different types of things are maturing, and they'll mature during the year at different times.
We'd like, I'm asking for the specifics.
They're there
What
in your
day-
monthly report. They have an expiration in each one of those securities. Each one of these securities gives you a detail of when it's due, when it matures,
In what monthly report?
the finance report.
We do get a series of reports attached, to our finance agendas, monthly, at least quarterly. I'm not
Monthly.
sure if we actually get them every month, but that should have the list. And basically, if I could interrupt for a second, I just want to make sure that I'm clear in my head. I mean, the corporate portfolio, we're investing in short-term securities because that's our liquid cash flow. So those assets have to mature quickly. We can't be tied up in any long-term investment vehicle in that fund. And so basically, they're probably setting them up so that we have bonds that mature every month. I mean, essentially, we're rolling over bonds every month and reinvesting. And that's basically how the kind of the standard for handling, funds that require short-term investment vehicles. So I hope that might help clarify.
Anybody else for these guys before we cut them loose?
Anybody else? Okay, thank you so much.
Gentlemen, thank you. We'll cut you loose.
Thank you. Appreciate your time.
Thank you both.
Does anybody have
Okay.
any questions for Tim?
For me.
while He's up here.
I do.
Go ahead.
I do.
Go ahead,
So I'm
Julie.
gonna go back, I'm
Sure.
going back to this. Okay, so over the next 12 months, $20 million in bonds are maturing. Can't get a month, but, okay, I can't get a
You
exact
can, you
answer.
can. I
You
just
can.
don't have it
Okay,
in
then
front
go
of me.
ahead, give me
Yeah,
an.
I don't
actual
have it in
answer.
front of me, but you can get it. It's in the
I've
monthly,
asked multiple times.
it's in your monthly report
Okay.
every month.
Okay, it's on this agenda.
The full board meeting, you get a full report, I believe.
At the board meeting where I put the monthly financial reports on file, it should be in
Is
in
there.
there.
it too much to, is it too much
Right.
to put on the finance committee agenda?
No, it just takes some
If,
prep. It
if I
needs some-
continue to ask about it, wouldn't we solve the
Julie,
problem?
go back and look at your agenda for the
I'm
county
addressing.
board. Well, I'm
our
addressing
treasurer.
you. I'm
Excuse
saying,
me.
we get those reports
So Tim,
monthly.
I would like you to have those
Sure.
put on the finance agenda.
Sure.
So
Julie,
wh-
please
where will,
direct your request toward me
where
and
will
I will
the-
decide if we want to do that
Excuse
for the
me.
finance meeting or not.
where will,
Please.
the $20 million bonds be going?
So we'll reinvest them depending on so if it's the corporate fund, they'll be laddered. We ladder things out so that in the months we're not receiving property taxes, we can still make AP and payroll. So I have a lot of things maturing in January and February and March and April because we have real estate taxes that come into the corporate fund in June and July and August and September and October, right? So most of our things mature in those months where we don't have that cash coming in, and then we use it for, I think, payroll and AP averages about, where'd Rashawn go? Sometimes 10 to $14 million a cycle. So each payday and AP period is 10, $14 million, depending on what's going on.
So these $20 million are going to payroll.
No, not directly, Julie. It's not that, it's very complex.
Are they going into the corporate fund?
They will, as they mature, we receive the funds back, and then we decide on, when we do have excess funds, where to put them back in. So this is a daily thing that I'm tasked with.
Mhm. Okay. And then we have other bonds maturing as well.
Yes. So if you'll notice, Stiefel is just one of many. We've got, as this one says, at the end of November, $191 million in corporate. So what's maturing there is only 20 million of it. And then the treasurers, we've got 310. And again, it's at different places. So very complex. We've got hundreds and hundreds of individual securities across these money managers that are working for us, as well as about 40 million in corporate reserves and local money markets with banks, 2 million here, 3 million there, and so on, and across about a dozen different local banks. And same with treasurers funds. So we've got both of those funds in those local places as well. And those are true money market accounts. There is no maturity date. It's available if you want it. So on the corporate side, we've got any given day, you could probably, if you wanted me to write a check for $60 million, I could do that. On treasurer side, probably more like 25 or 30 million. So what may help is, well, Rashawn does a great job of doing the corporate planning for you. Okay, my job is to bank it. Your finance staff is the ones that are planning all this as far as staying with your budget. On the treasurer side, treasurer C funds, when I say they're stickier, they last longer. That's been my experience, but I've never had any direction from those 51 departments to say, hey, this is when we're going to need these monies. So that portfolio is probably even shorter on an average duration than it could be, because I don't know when they're going to want the money, and I want to be able to give it to them if they want it. So when's the road project coming up? Or when's the health department going to need this? Or when does 911 need to build that? We don't get that information. It isn't provided to me. You could ask for that information so it would help us manage your money better, but that isn't a regular thing that's done. The treasurer money is just easier to invest because it seems like it sits there longer, fewer requests on it. Corporate, of course, is we have much more activity, obviously, to follow. We've got patterns we can follow as Rashawn was telling you with tax receipts. There's a pattern we follow, so we can predict, not with perfect certainty, but with pretty good certainty that it's going to behave the way it did the year before. And so that's my goal, is to keep the money available that you need to pay bills, but to earn as much as we can, so we generate those excess reserves that you were discussing at the last county board meeting.
So for the CARES money, do we hold any of that money
So the
first, there was CARES and there was ARPA.
and then the
So for
ARPA. Yeah, CARES, I believe, is all spent. Yeah,
Yeah.
CARES is spent.
And
ARPA, we have
and where were those monies held?
same places. It was,
And how much interest did we earn on the
Um,
CARES money?
on the CARES, again, see, these are things that you can't ask me for in
I
the moment.
think I've
You have to-
asked previously, so,
if
so
you
I
would-
guess
You need to
I'd like
do it,
to,
need to do those things in writing and through the county board so we can
in
coordinate.
writing.
Yeah,
Well,
yeah.
Please,
fair.
Rick.
I suppose
fair.
I'll write Chuck an email and Chuck will make sure it's put on the agenda next month.
No, we don't
It-
need
we
it on
can-
the agenda.
Well,
We
can-
have a
we should have a-
question.
I do. I
think
wanted
you
to
should
find out
direct it
about
to
the
Chuck
interest.
And get that
If we,
information.
okay, so
Happy
we'll
to
find
provide.
out about that.
Happy to
And then
provide.
what about currently the ARPA funds?
ARPA's
Are
got
those
about,
in the, are those invested earning interest?
yes. Now they're in a money market account because they got to be spent by the end of the year.
Right, I
So
was
they
gonna say
were
we're getting
over,
low.
over the past 4 years, I had them laddered in
Four-
different instruments. Now
Okay.
they're all in money market. We got about $40 million that has not been drawn yet.
Okay. All right, I'll include that as well.
Hmm.
Thank you.
Any more questions? Does anyone else have any questions? Okay, moving
you.
on. Thank you,
And
Tim, very
Anytime,
much.
glad to help.
Greatly appreciate it. And it was very informative. Okay, next up on new business, number 2, we just have some fiscal year end budget transfer, housekeeping to take care of. Motion Trinier. Second, do we have a previous Oxley? Do we have a?
Previous is gonna have an abstention.
Oh, all right, let's just do a roll call. Oh, I need to turn you back on, Perla, right?
This is number 2.
Yeah. Okay, go ahead. Let's do a roll call. Thank you.
Berkowitz,
Yes.
Butler,
Yes.
Oxley,
Yes.
Trainier,
Yes.
Winfrey,
Yes.
Newquist.
Yes,
Motion carries.
thank you. Number 2, authorizing the use of contingency.
Number
For-
3.
I'm sorry, number 3. God, what is wrong with me today? Authorizing use of contingency for the sheriff ADF.
Previous.
Do we have a second? All in favor? Aye.
Aye.
Does anybody have any questions? I should have asked that.
No, I read my packet.
Would you gentlemen like to speak, even though we just passed it? Okay, go ahead.
Thanks for your time here.
You're welcome.
Yeah, we lost the deep freeze at the ADF and right now we're paying for 2 semi-trailer freezer trucks out there. So we're losing quite a bit of money every day.
Okay,
What's that? $500 a day, not counting the fuel. Yeah.
and this was a compression failure, right? Or-
It's, no, the whole system has
Oh,
failed
the
now.
whole
We've
system,
gone
okay.
through the compressors pretty much every year. I mean, now there's just so much stuff built up in the line and in the evaporator itself that it just keeps going into the new compressors and
Yeah.
they keep failing. So the system is actually 18 years old. So it's an old system.
Okay. Hold on. Okay, could I ask you guys to state your names? I'm sorry, we need
Keith,
that for the,
okay.
thank you.
My name's Joseph Novak. I do the HVAC at the adult detention facility.
Thank you. Okay, member trainer, you had a, oh, I need to turn your mic on.
Thank you.
There we
Yeah,
go.
I just want to check. You said 18 years old. I wondered, because I don't think I could tell from what I read. Is this like the old Freon, the stuff they don't want us to use anymore? Than what we
No.
currently have?
No.
Oh, so
no,
that was already.
That would be
the
like
newer
R22
generation.
and R12
Okay,
and 11.
so now we're gonna get whatever the newest and latest is. Okay.
Yeah, but they are actually the other thing, they changed Freons again.
Yeah, I know. So
So-
I said, we're gonna get the newest.
We're
and
gonna get
latest.
the newest of the Freons, yes,
Yeah,
but
that was my only question.
yeah, it's better, but
No
it's
big deal.
combustible now, so they took away that, but
Uh,
yeah.
Chuck, go ahead. You've got a question?
Yeah, Madam Chair, can I ask, I think we had a little trouble getting the first, the second, and the previous on the last one. So if we could just get a clear idea
Oh,
about who did
Got
the
it.
first, the
I think it
second.
was Winfrey or Oxley moved, Winfrey seconded. Right, Jackie was previous. Okay,
And who was second on the previous? Okay,
Okay.
okay.
thank you.
Alright.
I just have a quick question. So was this something obviously that you didn't budget for? Did this come as a surprise? And I can turn your mic on if I need to.
No, we did not budget for this. We budget for the, like the compressors if they go bad
Mhm.
and stuff like that. But I can't budget for like an emergency like
Right,
purpose.
got it.
So did we know the whole thing was, no, we didn't. I mean,
Okay.
we knew eventually it was probably gonna die where I could have went under capital, but it just so happened it just,
I always have to ask that question.
No,
Thank
that's
you. Okay, we've got a motion, a second. Oh, Julie, go ahead.
Thank you. Okay, so for your facilities, Mr. Fern doesn't oversee any of these
That's a
systems?
touchy subject, to be honest with you. Yeah, because I could have had this meeting last month if it was not for having to go through other channels first.
Okay.
Yeah.
So I guess I'm trying to understand the relationship here. I, I believe that the reporting brought forward by Mr. Fern included, all of our departments, yet there was no mention of this.
We
Not
are
even-
not affiliate, we are a separate entity, the sheriff's department.
Okay.
Okay, so
So you're
we,
working independently.
we are working independently, helping the county out. So like when the county needs the craftsman, we come and help the county out.
Okay.
That's the extent of, you know,
So, this obviously sounds like it wasn't a surprise.
well, it was a surprise. I
Okay.
mean, I couldn't tell it was gonna go out when it did.
But
Because we
it's
just had the
18 years old.
compressor replaced last year.
Okay, I want to make sure if there were issues addressing this or well, if there were, I want to make sure that those things get
Meaning what? I mean,
worked out.
well, of course, we were replacing
Okay.
parts here and there, but now it's to the point the lines have to be replaced. The evaporator has to be replaced along with the units themselves. So the way they're doing it now, the way we have it up on the roof now, it's on one long compressor skid. We have, 3 coolers on there? And the deep freeze and another freezer. They're going to separate it now. Instead of having it on one rack, the new one's going to have 2 separate compressors for the deep freeze on separate racks now.
Okay.
So it's going to be easier to work on, easier to, if anything needs to be replaced, easier to replace that. Right.
Okay,
Okay.
so this is obviously very critical. I'm glad you've got this all put together and definitely want to get this going for you, put it through, get it approved so you can, it seems very critical. So thank you for bringing it forward.
Well, thanks for listening. I
You're
appreciate
welcome.
it. Thank you.
So for
Yeah,
clarification,
Dave and then.
Yes.
this bid's 149,450.
Yeah, I put in, I think, for 155 when I did it, because we have Adler Roofing who's got to do some roofing on the new
Right.
curbs. So,
Understand?
yes.
How much money did you have in your contingency fund to do compressor replacement stuff for that for the year?
You know
Or
what,
in your
it does,
budget?
it doesn't specify on there. It just specifies like on parts and for equipment and stuff. But I mean, that would eat up my whole budget for the year if
I
I,
understand, but did you have a certain amount set aside for compressor
like
replacement?
probably about 8,000.
That's the only thing you had in there extra?
Yeah, I mean, that's usually what we have to replace on them.
So what you're saying is this is basically going to eat up your contingency.
Yeah, oh, it would eat up,
Okay.
yeah, it would eat up whatever I have in there.
Okay.
So where do we propose on getting this money from?
Well, it's in the contingency now, currently, I believe.
You,
For Rashawn, do you?
Marcy got it.
I'm gonna
She
ask
said it's-
Rashawn to come up and let us know.
So it's going to come out of county board contingency, and the county board budget, as Keith stated, he can't cover the cost of that
Sure.
out of his budget.
Okay,
Understood.
so it's not in his contingency. I looked at it wrong then.
It would be
Thank you.
budget. They don't have a contingency line, and there's only one contingency line in the corporate fund, and that's placed in the county board's budget, just so everybody's clear.
Okay, thank you for clarifying that. Appreciate it.
Thank you, Rashawn.
Are you good?
I'm good, yes.
Okay, Mr. Butler.
Yeah, so I guess we've kind of known that they needed work over there. They're talking about building a new place, remodeling, stuff like that. So we knew costs were coming and, obviously this, is an emergency. They were without a cooler. They need a new cooler. So, I mean, and he can't predict that, and there comes a cost point that replacing parts just doesn't make any sense anymore. So I would support this.
Thank you. Jackie?
Thank you.
Thank you. Just a couple follow-ups. One, I very much recognize that the sheriff is a separate body elected on his own. We approve his budget. That's pretty much the extent of our control over the sheriff's office and the extent really of the county executive's control. So I'm just concerned, want to make sure going forward, if you know you need something, that you're able to come to this committee immediately when you know you need it and not have to go through some other sort of
I
panel.
would love to. My hands were tied on that. I used to come to you guys all the time and you
Yeah.
guys have been great. And then
No.
I was shut down until I couldn't do
Understood.
that.
So that's my first comment. And then my second comment has to do with the life of the freezer. I know we did a thing with rotation of cars and other computers and all. I thought we had also built in through the department that used to handle this before Mr. Fern was brought on, where we were planning ahead for these kind of things. And to me, an 18-year-old freezer, that's an accident waiting to happen.
It is. And
And so I feel like maybe we're missing some things, but then again, I understand the sheriff's department is a separate entity and we can't really micromanage it.
I mean, we really encourage people at budget time to bring their actual needs
yeah.
forward, but that's all we can do is encourage people to bring their
Yeah,
needs forward.
especially when they have
so.
older equipment. So, and I get it, you don't know it's going to break. Just like, I wouldn't know if my household air conditioner was going to go out.
Exactly.
But
So.
18 years old, probably a pretty good chance it's going to die.
well, we keep it going as long as we can. I mean, we get it. I mean,
Did you have a plan for buying a new one? Like next
not on that. No, our list is very long on priorities of what we need more, than that. I mean, if I came with everything, it would be in the.
And we're awfully
Next year's
tight with
budget
money. I get
request.
it. I get it. All right,
Good.
thank you.
Did you have another question, Dave? What? You had we've got our motions. You've got your light on. That's why, Mr. Butler, did you? Okay, let me, Dan, there you go,
I
Dan.
just wanted to say, I appreciate you guys getting the most out of this equipment. I don't want to buy stuff too quick. If you can fix it, fix
Right,
it.
if we can fix
But
it,
when
we
it's
do.
time to replace it, come, we'll
Right.
see about getting that new one for you.
If I might add too, for what it's worth, the system in place does have two separate circuits. So when one is down, and this has happened in the past, where the other one will pick up the slack and the freezer will remain working. This was more of just a perfect storm where both failed.
It happens.
We do have a plan in place for this, and like I said, we have utilized it, but at this point here, parts being readily available and then two circuits down, that's where it's just turning.
Yep.
Okay, thank you. Well, we have all the necessary motions in place. So all in favor? Aye. Opposed? Motion carries.
Thank you very
guys.
much.
Really appreciate it.
Thank you.
Oh, no, my iPad is locking up, so. Thank you. Okay, got it back. Number 4, the delinquent tax resolutions. Can I get a motion? Previous? Second to the previous, anybody?
Second.
All in favor? Aye. Opposed? Yes.
So when I tried to.
Oh, I'm sorry. You got it.
So with the documentation on the agenda, I come up with something funny. I come up with instructions for Will County resolutions rather than the delinquent tax resolution. Okay, let me try that.
Yeah, it's at the bottom, isn't it?
Okay, I see.
Yep,
So,
there, second
but
to the
when-
last page.
When they copy things sideways, there's no way to rotate them. So if they could make sure that they're not sideways, that would be very helpful. Unless somebody knows how to rotate that page. I'm not aware.
Okay, thank you for your comment. All right, all in favor? Aye. Opposed? Motion carries. Number 5, resolution 26-4190, authorizing the county auditor to enter into a professional services contract for a financial and operational analysis of law enforcement services provided to the village of Homer Glen. Can I get a motion and a second, and then we'll have Duffy. Motion Trudy, second Oxley. Okay, Duffy, take it away.
Thank you, Chair Newquist. The Will County Sheriff's Office had entered into a contract originally in 2001 and then more recently in 2007 for providing intergovernmental agreement law enforcement services with the village of Homer Glen. Through that period, they evaluate and come together, developing a calculation and evaluation of the full economic value and impact of those services. At this time, as the resolution states, it's in the best interest of the county to explore the full economic value of those law enforcement services. Basically, what we would be asking for is budget to enter into a contract with a professional service provider that would assess and confirm and come back with a total absorption cost that's including all overhead, direct costs, indirect costs, direct labor, indirect labor, all those different types of calculations. However, we also would like to make sure that this is a firm that specializes in evaluating the cost of law enforcement services. There is evaluations where we use absorption costing, activity-based costing. We set predetermined overhead rates. Those overhead rates are reviewed by our office on an annual basis. There is different calculations for a 12-hour shift, 80-hour shift, relief shifting. They take information from the CAD, the computer-assisted dispatch. A lot of different types of small calculations go into this. At this time, we would like to use a specialized provider who is more familiar with doing this. The sheriff's office would be working with them, preparing data, sharing that data, and then they would come back with those calculations and helping us confirm and explore what those full impacts are.
So yeah, what you're basically trying to do is assess how much does it really cost us to provide these services to Homer Glen, and are we charging appropriately for them?
Yeah.
And yeah, and you need a specialized firm to do that.
Yeah.
Or it would be better to have you'd probably get a more accurate picture with a more specialized firm. So, okay. I see we have some questions. I've been going this way. I'll start this way, Jack. Oh, let's see. Okay, Jackie, go right ahead.
Thank you, Chair Newquist. My only question is, I heard the date, I read the date, 2007. Seems like 18 years was kind of a long time to wait. And I didn't know, I should remember this, but I don't. Do we get a reimbursement based on the officer's cost per hour, or do we just charge them a cost per hour?
Yeah, that's a good question. I'm not
I
sure.
can't remember. I know I've heard this before.
Yeah, so there is a annual, within the intergovernmental agreement, there is a cost matrix that comes up with the total cost for the annual services.
But has that changed each year with changes in salary?
It does. It
Okay,
has changed that.
that was
cost.
my concern. Okay, and now this is just gonna refine it a little bit more, make sure overhead costs, because you mentioned overhead, our overhead and other ancillary costs are getting compensated appropriately.
Yes, and the sheriff's department has incorporated all those changes throughout the years.
Okay.
And this is our first outside analysis.
Uh-huh.
And we believe it's.
Yeah, it's overdue. I'm thinking we ought to do this at least every 10 years, maybe more often, but I know we've had huge cost increases on almost everything over the last 5 to 6 years. So thank you.
Thank you. Dan, and then Dave and Julie.
So you initially we came up with a cost per officer per day. And then we have certain multipliers based on our costs. So those costs, I would have to venture to say, went up. They ever go down? Probably not.
Overhead sometimes. Yeah, sometimes overhead. We could have seen some small, like if you have an application base and choose a basis with the total cost, sometimes total cost for that, because we've become more efficient, those possibly would go down. So
Whatever it is, matrix for figuring this is pretty responsive then in the past so far. So I'm just saying, has there been like a something in the budget that has brought this to your awareness, like that you feel you need to go to an outside source for something that seems to have been pretty dialed in? No.
No, we've talked about this in years past, and finally we have discussed, we would like to go forward and use the outside service. We did talk with consultants last year, and it just brought it to, you know, probably more to our focus. You know, we started focusing in these conversations when we had discussed in the past with, we have a short list of vendors that we have used and utilized in the past years. One of them had particular experience on engagements like this, and we thought this is applicable.
How much is the agreement for the police for, like, with them? Like, is it daily or is it yearly?
It's annual.
So what is it a year right now? Like,
It's over $5 million.
so Homer pays 5 million to us for the police over there?
Yes.
Which is really cheap compared to the cost of running your own police department.
Yeah.
Well, I mean, but is it cheap? I mean, is it too cheap?
It is.
Is it too cheap? I mean.
Well, I
we
don't know if
that
it's
for
too
a
cheap.
fact.
I don't know if it's too cheap. I'm just saying
Well, I'm just saying, I
compared.
guess that's what they're trying to figure out.
Exactly. I'm just saying compared to the cost of running your own police department, it's probably much less than the actual cost of running your own police department. So.
Yeah.
And yes, that's exactly the assessment we are asking.
Any more questions, Dan?
That's a good point.
Dave, go ahead.
So this study so it's $75,000 to hire this outside firm? Approximately.
We roughly.
Okay.
roughly.
Will Homer Glenn participate in paying for that also, or any part of it?
Well, in our total, currently in the cost, like the cost matrix that we include, we try to do the best possible job of absorption costing.
Okay.
So total activity costing, something like that, we would, you know,
Overhead would be in the overhead.
that would be included in overhead. Yeah.
Right. So this is gonna give us a clear picture of our exact costs to provide them with police services. Okay, thank you.
Hey, Julie, go ahead.
Okay, so would the village pay perhaps half of the consulting fee, or how would you?
That's the interesting question on after the assessment is done and how they choose to bring this in, because obviously we can use this for our own purposes. So it's not exactly a direct exchange to them. So it depends on their final assessment.
So this will help you determine the cost for all of our officers throughout the county. That's what you're saying.
That's a good point, where we would at least get some education from that, and the sheriff would be able to utilize what they've learned from this to then to go forward with their calculation.
Okay, so Homer Glen obviously does not have a jail. Do they have any police stations? No.
I don't think so.
None. Okay, so when you arrest or have to take into custody somebody from Homer Glen, then where do you bring them?
Those are probably better answered by the sheriff.
Okay, but you have to bring them probably to a county
Thinking
property, correct?
Yeah, so then it's sort of like within the property taxes, we all pay for the county jail.
So you are determining the cost for the county to provide, that's also going to be reflected in your report, correct?
Yes, and I'll say thank you. That's a good scope to include in that assessment.
We absolutely need to include that because those are services we are providing. The other thing, you know, in today's world, you can see when our law enforcement and emergency responders go out there and put their lives on the line, we do see people who are injured on both sides. What about the costs for that? If you take, you know, an offender or somebody in possession from Homer Glen, and they have to go for medical care or anything, and or perhaps be brought to some type of a secure. are we also, who pays for that? If there's any type of medical care given, who pays that cost?
Yeah, within the calculation currently, our workers' comp, the emergency, medical, the response, the sick leave, the training, all these things would be incorporated.
Well, I'm
under
talking about the,
Enforcement, like
I'm talking about the public in our custody.
yeah, maybe like public safety. Again, that's rolled up all in the big sheriff or the larger function of public safety.
Okay, so I don't want to assume that that is part of this formula. I want to make sure it is, okay? Because if we bring somebody in our custody and they need care, who absorbs that cost? Who pays for it?
So that's part of this whole analysis that we're
Mhm.
looking for, because
Okay.
while the sheriff's office does a fantastic job of breaking out all these costs, it's a huge matrix that they've been working on for years. Also, since the agreement hasn't been looked at since 2007, these are the kind of things that we want to make sure are being absorbed in all of these costs. So with a subject matter expert who used to actually be a sheriff's person, we're hoping that things that we may be missing, not be thinking, that all of it is brought together in this formula to actually get the best deal for the county. So the sheriff does include a whole bunch of everything, but there's also,
Bunch of everything.
but there's also the limitations of the original contract. So there are some things in the original 2001 07 contract that they did not agree upon back then that we may need to add to it. So that's also part of the reason, because the contract is so old, it really needs to be looked at.
Okay, so the things that I feel are kind of critical is making sure that we're
Yes.
addressing, okay, if they are in our custody, that is a cost to the county. And then second is if they need medical care or something right now, who pays for that?
I think that goes with Duffy's answer of the public safety for the county. Well, but the things that we want to make sure we're covering, like, for example, in the overhead numbers, I am trying to put overhead numbers together, indirect costs that I feel that if you had a sheriff's office, you'd be touching. So certain departments, IT, auditor, purchasing, treasurer, all those little tiny things. And we do arbitrary percentages of employees or percentages of calls or whatever it might be. That's how we do our indirect costs. We feel that those are great numbers. Are they? I don't know. You know what I mean? So that this is part of the subject matter expert that's going to look at these things. And as far as the $75,000 contract goes, that we're asking for, that's actually super cheap, because while we were doing some analysis on it, and there are firms that, like public accounting firms that do these kind of analysis, they're upwards of $200,000-300,000. So this is not a cheap process, but through our professional organizations and all the other auditors and all the other 30 or whatever, 50 experience between the two of us, that we have certain consultants that we feel are subject matter experts that we can actually negotiate with. Just so you know, we're trying to get the best deal out there. And I'll even try to get it down below that.
Okay, thank you. Are we good? Okay, anybody, Dan, you've got it, and Sherry, you had your light on, do you? Okay, Dan, go ahead. Oh, I gotta put your, okay.
Yeah,
thank you.
so I'm just curious. I mean, I heard some of the other things you just said, so that partly answered this question. Cause I figure, I've been in construction for 35 years. T&M, I love it.
Mhm.
You need a couple guys every day, fine, I'll send them. So that's usually a profitable deal. So, you figure your salaries, your wages, vehicle costs.
Yes, all of that.
Whatever, fuel.
Yep.
But now you want to dip into the IT, like, because they might radio in and use some of it. You want to parcel it out. I mean,
We've been doing that. That was part of the contract from 01 forward. So we've been
most
doing
of those
that.
are already things.
Yeah, those
you've
are
been
already,
figuring.
we just want to make sure that those
Okay.
percentages that we're using are good.
So just to question, like, what is it that you don't know? That you have to hire this guy for? Because if the things you
Yeah.
mentioned, you already know.
Yeah,
What is it you don't know?
Yeah, most specifically is the sheriff's actual direct costs. So the 12-hour shift, the 80-hour shift relief calculations on how much a person is assigned for a shift and how much they can be assigned. Just because they're waiting and not dispatched to Village of Homer, how much does that?
So their contract, they're waiting, they're not actually patrolling.
Well, they're patrolling, and then there's additional, because we do offer the sheriff's department. So some are patrolling, some have extra time, some are going to be, and that the shift making is, I think, the most difficult part when you're trying to allocate performance-based law enforcement and activity-based cost and law enforcement cost absorption.
But at some point, if you allocate a few more people to do something into a territory, you know what that fixed cost is gonna be by their salary. I'm just confused why. We would need to know more than that.
Well, two things, and I think that's a good question. Do we have the current method and approach done right? Is one question we're gonna answer. I think that's important because it's a significant revenue. The $5 million, I think, is a significant revenue that I think justifies the cost of having it evaluated. Secondly, because it's a revenue, that's where it came to this body now, is saying, I think because we do receive that significant amount of revenue, and if we are not judging it correctly on the modern or most best practice allocation approaches or methods that are being used, is there another reason we could come back and say, there's a contract that we could do?
So was there anything different about the model of Homer Glen than, say, the model of the rest of the county? What is the difference? Like,
We don't,
I
police,
don't-
I'm sorry.
I think that's a good discussion for public safety. And if you do approve this resolution, I would suggest that you bring this back for the discussion on the results, because that could help in the future.
One last question then.
Sheriff's
Okay,
costs.
and do we know who's doing this study?
Currently, we have a small short list of vendors that we've used previously. One in particular that does have previous law enforcement experience and has come in and helped the county. So
Who
is that? 65th North has used us. We've used them. His name is Dave Russ.
And Duffy, thank you for bringing this
Go ahead,
forward. I think this is long overdue. And I'm really glad to see you bring this forward. The other impact to the county would also be the cost for equipment when we're providing services. And I'm sure that's another part of the formula you will need to include. Equipment would include the vehicles. They'd include any type of, fuel, but any other type of equipment that an officer needs when they're out. I know we've got everything from gear to, but all of those little things, those all have a tangible cost to the county. And I mean, we know how expensive these items are, because they come forward and then things are always being improved and updated. So I want to make sure that that is also included and a part of that valuation.
Yeah, we evaluate actually the newest 2025 fully marked Ford police utility with all of its signals, the vehicle cost, the radio cost, the vehicle costs, those that are given for those
assigned 20.
assigned 20 vehicles.
So, but at this point, we should look forward, because 2025, we're moving forward. So the price of vehicles, I believe I've heard, especially a police vehicle, I would anticipate that cost is rising.
So that's good. The Explorer, the larger size was the 2026 that we evaluated.
So we're probably getting towards the 2027 and 2028 price ranges.
And I'm
For the
assuming that's
purchase.
all part of this.
Yeah, and the vendor that we've spoken of is very helpful, very customer service oriented. He could give an education to us and the sheriffs, and we could learn a lot as one evaluation going forward as well, and assessments as well.
And I just want to make one comment and then we'll vote. This is a unique situation, correct? I don't know of any other village in Will County where we are the police department. So I do think it's prudent that you're going ahead and doing with this since we don't
As far
really
as incorporated.
have incorporated, correct? I mean, obviously, we're the, for unincorporated, but we're basically providing, we are the police department for the village of Homer Glen. Okay. Okay, we've got a motion and a second. Can I get a previous roll in a second?
have a previous.
Oh, okay, I'm sorry. Roll call. Very quick, Julie. We need to move on. Oh, microphone.
Sorry. I know if you get a ticket, a parking ticket in Naperville, you got to go to their police station, you have to pay it. What about Homer Glen?
We'll include that.
Thank you.
Thank you. All right.
Can I have your first and last names for the record?
Sure. My name is Kevin Duffy Blackburn. You know, the real.
Sorry, I forgot to ask you guys to.
Bruce Wayne.
Yeah.
Batman. No, thank you.
And I am Kathy Bissy.
Can you spell that last name for me?
Stephanie Devine, VASILAKIS. I think pleasant, like the word, like have a pleasant day.
My apologies, you guys. I should have had you state your names for the record. So, okay, Perla, go ahead with the roll call when you're ready.
Berkowitz?
Yes.
Butler? Axley?
Yes.
Winfrey?
Yes.
Newquist?
Yes.
Motion carries.
Okay, that was it for new business. I don't have any other new business. I have no announcements or reports except to say that our next meeting is scheduled for March. What date is that? 3rd, 2026. I don't believe we have a need for an executive session, so I will take a motion for adjournment. Motion, second, all in favor? Aye, opposed, motion, we're adjourned. Thank you, everyone.
It's